In today's video, Scott and I are going to have an update on the BTC ETF, and we're going to look at those inflows and tell you what's going on there. And then we're going to talk about the upcoming Ethereum ETF. This is really exciting, and there's some really interesting things going on with that, and we're going to spend some time talking about that. Also, there was a mysterious wallet from 2010 that was just activated. We're going to spend some time talking about who that could be and what that could mean for the upcoming Bitcoin rally that we're absolutely seeing. And by the way, this is not financial advice. Do your own research, and we hope you enjoy. All right, so let's do the BTC ETF update of what we've been talking about the last couple of weeks.
Okay.
And you have some interesting news about what's happening with BlackRock outside of just the ETF.
Yes.
So what's going on with that?
Well, they announced this week that they're going to add Bitcoin exposure to their largest fund.
Okay.
So that largest fund is over $700 billion in assets under management. And they're talking about creating another fund that's an index of Bitcoin ETFs. So they're really kind of going whole hog into Bitcoin as an asset, and they're starting to sell it to the broader group. I suspect that they'll turn their wirehouse on soon. I know the talk was 60 days. And I heard some are turning them on sooner. I suspect that they'll see that and that they'll pivot.
So a BlackRock fund of the other Bitcoin ETFs, multiple Bitcoin ETFs in one fund.
Yeah, they're talking about it. I don't know how that would work financially.
Or the advantage to that.
Yeah, I don't know what the advantage is. Now, maybe that's a risk hedge for the fund, but I would think that the fund would be the least risky thing that they were working on. So yeah, that's not something I have a lot of visibility into what kind of game they're playing.
Yeah.
But the one that was really interesting to me was more about the fact that, okay, we went out and we created this ETF and we're going to use this ETF to give people exposure to Bitcoin. And oh, by the way, we don't have enough exposure to Bitcoin. So in our big fund, we're going to go fill it up with some of this stuff because we believe in it that much.
Yeah.
And I think, in some ways that's a way to tell their clients that they really do believe in it. Like we're investing in this in our major fund. This is not just some side road that we're going down for the weirdos that want to have some Bitcoin in their wallet or in their portfolio.
Right.
But we're going down this because we believe that this is a diversity asset that provides a value to our fund.
Yes.
And so we're adding it here to our big fund that everybody wants to be in.
Yep.
And probably this is going to spread to funds around the world over the course of more than a year.
Right.
Which is part of why I'm saying I think these inflows continue in a sustained way.
Oh, and these inflows, look at these right here. So we're still seeing the outflows. We did have some decent outflows right here on the 4th of March, which is also when Coinbase went down. Coincidentally, I don't know if that's a conspiracy or not, but yeah, we're just seeing these consistent inflows here. What's the total there? Total of
608. Yeah.
608 million there on, what is that, about March 6th or 7th? Probably the 7th.
7th.
Trailing by a couple of days.
Yeah.
So yeah, these inflows are consistently staying huge.
Well, I think one of the things that was surprising to me was that there's increased outflows from GBTC.
Yep.
So you notice how the last day in the previous week, you had a really large outflow, some 600 million in
600
outflow,
million.
right? And you look at the following few days, and they had some pretty significant outflows, 500 million the next day, another maybe 400 or so, and 300. So there are some people leaving the Grayscale, but it kind of looks like they're going into the other ones because you see the other ones pumped up real big, and it looks kind of like you take it out of this fund because this fund has 1.5% fees, and you put it in that fund because it has 0.5% fees.
Right.
Then you're winning in your investment strategy.
Yes.
But you didn't really change the asset. You moved the desire to hold that asset to another vendor.
Yeah, it's just more profitable with a better fee structure.
Yeah,
for sure.
Well, and I think that's what people have been saying is that Grayscale is losing a lot because they have high fees. And it's not that people are leaving crypto or leaving Bitcoin per se. It's that they're leaving the higher fee structure.
Right.
I mean, when Grayscale was around last year, they were the game. You wanted that exposure. You needed to have them if you're doing it in a portfolio way.
Right.
And now the game is changing. Now you can hold something else. There are competitors. Those competitors are providing the identical asset. And the only thing to really measure them against is their reliability or permanence, right? Are they a reliable party that'll be around and not disappear with your Bitcoin, and the Bitcoin itself, right? I mean, so fees against the Bitcoin and the reliability of the fund are really the only things you have to go against.
Do we know how big Grayscale is on their Bitcoin holdings? They're the biggest, aren't they? They're huge.
They're more than twice what's been put in. They're over 20 billion.
Okay.
Yeah. Currently. Now they've been going down, right? They were like 40 or 30 something, and they've been going down as people get out and either, divest themselves of crypto incomplete or move it to a place where the fees are lower.
Yeah.
Their fees were really high when they first opened. And there's also there's some kind of a trading premium that's based on more financial stuff that I don't play around with. And it has to do with like what they're trading at a discount or trading at a premium based on whether or not the asset's going up or down.
Okay.
And I don't know if that means like there's a time delay before you can get out. And that's part of that premium, or if it's I want to hold this and everybody else wants to hold it, so I have to pay extra to hold it. I mean, I don't do that because I self hold.
Right.
I hodl for myself.
That's stock market stuff too.
Yeah.
So why don't they just change their fee structure and stop these outflows? I don't get. They're not saying why. Do we know why they're not changing their fee structure?
I don't know why you wouldn't. Now, maybe there's some difficulty in arranging their structure.
Oh, SEC filing type stuff?
Maybe there's some challenges to having to refile paperwork and wait, but they've had time. So
they have.
I don't really see a reason why, other than maybe they're not interested in being a primary player in that. Maybe they want to be a player, but maybe they felt overexposed. I don't know. I really don't know. In my eyes, Bitcoin's the thing to have right now.
Right.
It's not a time to be getting rid of it. And so that's why it's hard to think that they're selling it out and not transferring to a lower cost place to hold it.
Maybe, and this pivots to the second part of this video, because they're going to be a big player in the Ethereum ETF.
Yes.
So maybe they're aiming more at that for better gains. I mean, if Bitcoin went to 100K by the end of the year and they're at 70 now, that's a nice gain, but it's a lot different than if Ethereum's at 3,900 now and it goes to 20,000 by the end of the year.
Yeah, but Grayscale had the first mover advantage in Bitcoin. They are not going to have the first mover advantage in ETH.
The ETH ETF.
Yes.
Right.
What you're going to see is you're going to see people like BlackRock are going to be the gorilla, right? They're going to be the big guy that people are like, well, it's BlackRock. I trust them.
Right.
Right. That's where my money is, or that's my cousin works for them, or whatever.
Yeah.
Right? There's a certain amount of the bigger players are all going to be on a more level playing field where one of them's not going to be ahead. Remember, Grayscale got in and they were like basically the only game in town.
That's right.
If you wanted it, that's where you went. And it didn't matter if you had to pay a premium, and it didn't matter if you had to have high fees. You got your exposure.
Right. That was the only
way to get it. And I think that's where they were able to charge more and make a lot of money. And maybe maybe in financial world, if you don't pay a lot of attention, you pay a few extra fees, that's good for me.
Right.
I mean,
now it's not guaranteed though. The ETF for ETH is going to happen in May. But
that's correct.
It's not a guarantee. Let me show you this right here. So Poly Market is a prediction market. It's the biggest decentralized prediction market. They're putting it at 6. So the yes and no over here on the right-hand side. No, that it's going to be approved 66%. That's the same as the dollar amount. And yes, it will be approved at 35% on May 31st. Now, this is just a prediction market. So what does that mean? It's just interesting data. It doesn't mean it is or isn't. But what do you think? You think it's going to be approved in May?
Some of this has to do with political pressures.
Yeah, it does.
We're talking about Gary Gensler,
right?
And he hates ETH. He hates ETH.
He backed off on it not being a security, didn't he?
Well, he hasn't changed his position, but he's toned it down.
Okay.
He's also been lit up by Congress over and over again over this. Like, you can't tell us this is a security. You're the guys that study it. You're supposed to know.
Right.
You can't answer the question. Why are you not answering the question?
Right.
The kind of stuff that's going on in this committee hearings.
Yep.
And he's just doing the stonewall. Oh, I gotta, this and that, and honor and duty and blah, blah, blah.
Right.
Okay. This is not, this is not what you want in your financial market. You want regulatory clarity. You want to know what their position is so that you can take advantage of that market or avoid that market based on the outcomes that you could see from the position of the authority.
Mm-hmm.
And the authority is basically acting like a sixth grader on the playground, saying, I don't want you to play with this ball, so I'm going to hold this ball, and you're not allowed to play with it. This is stupid. People want to get involved, and the job of the SEC is not to prevent people from getting involved. It's to help provide awareness and protect people from scams. Well, just because Gary thinks that this or that is a scam doesn't make it a scam,
Right.
right? And he has a outsized influence because he's the head of the you know the SEC.
Right.
But honestly, I think his days are numbered. I think the fact that he's been an obstacle
Mm-hmm.
means that he's a polarizing figure in that world. And, the money talks and the politicians follow. And when the money starts talking louder, and it's been talking louder every day, it gets a little louder.
And it's not necessarily a right-left thing on politics.
No, it's not.
So maybe his days are numbered, that people are getting kind of tired of whatever he's pulling, letting the courts decide everything, and instead of them making the decisions they're supposed to be making.
Yeah, well, they're not supposed to decide whether or not that asset is good. They're supposed to decide whether or not it's a security
Right.
and follow security rules. They're supposed to decide whether or not it's a Ponzi or a rug pull or these kinds of things
Right.
to protect consumers is their mandate. But it's also to nurture financial environments that produce cash.
Sure. Healthy markets. Absolutely.
Healthy markets make money, and development and innovation make money.
Right.
And they kind of strayed from this in the crypto world and been really anti-crypto. And, the congressmen that talk about it tend to be on one side or the other if they're going to talk about it. And the ones that are against it are generally older. They're more senior.
Huge,
But been in Congress for years and approaching retirement age. This is not the age in crypto.
Right.
Sure, you see people that are older in crypto. I'm older. I'm in crypto. But the people who are really in crypto are under 30.
Yeah, it's a young person's game right now.
It's a young person's game. It's a complex environment. You have to be somewhat savvy about what you're doing. A lot of things, a lot of moving parts, moving really fast.
Mm-hmm.
So these are things that as you get older, you tend to slow down. You tend to be less interested in going out to the club and getting crazy because it's too loud and too frenetic and that for where you're at the time. And I used to love to go to the club and dance with the girls, do the things. Not so much anymore.
Well, plus the older players in the legislature like this, they're very entrenched with the banks or the old money, the old systems that are sort of threatened by crypto.
They got a lot of people who they owe.
Right.
They owe favors to, and those people are big money, and money has not been interested in crypto until recently.
Yeah, that's changing now.
Yeah. So I expect that to be the same kind of shift with the politicians.
Right.
The politicians don't have a platform based on themselves. They have a platform based on their constituents, their donors, their cronies, but they don't generally take a real strong polarizing position. They want to try and smooth things over and everybody get along and all y'all should vote for me because XYZ.
Now, the Ethereum ETF has a unique thing that we've been talking about, and that is the staking issue. So in Canada right now, they've got an Ethereum staking ETF. They're ahead of the game on us on having ETFs with crypto. They have ETFs right now that are multi-asset ETFs in crypto, and they have, and then now the one that's a staking Ethereum ETF is pretty small. So they're not huge numbers, but they have it. So let's say that comes here. Let's say we get, I think it was the Franklin Templeton application said they wanted to be staking their ETH in the ETF. So it is unique from the Bitcoin ETF, and there's a mechanism there to provide yield that Stakecoin doesn't have. But there's some problems with that, isn't there, about having these guys staking their ETF? What are the problems with that?
Well, there are a few different problems that come with the staking. I mean, one of the things is that they need to be able to take it out. Okay. Because if you sell, they have to sell.
So staking locks it up. Well,
it depends on how you stake and where you stake. Like who is staking,
Sure.
where does it go?
Okay.
Another big challenge there is staked coin generally isn't in a cold wallet.
So it's going to sit up on Coinbase on the hot wallet, right?
Well, there are processes that allow some staking can be done from inside a wallet.
Okay.
But I don't know that you can stake in the Ethereum world or with a validator without moving the asset. So I think you can delegate, but that's not staking. That's delegating your voting power, right?
Is it a threat to ETF in any way if to ETH, if these ETFs are staking in a big way? Is that a threat to ETF, the ecosystem, the decentralization that we like?
Well, when you stake, typically you're not a node.
Okay.
You're staking with somebody who is a node, so you're adding clout to some particular player.
Okay.
So if everybody goes to the same staking place, then their voting power is outsized.
So if each one of these ETFs that was staking ETH all went to Coinbase, because that's where they're going to be custodian of these ETFs anyway, that gives Coinbase a lot of voting power on the future of ETH, doesn't it?
Yes, it does. It's hard to say that those, ETH is changing. ETH is a whole process of the roadmap shows a lot of places where we stop and change things, and we're essentially forking to a different technology. ETH moved from proof of work to proof of stake. We have proto-dank sharding now, so that's one of the first things to start helping us towards zero knowledge.
What's the change name of what coming up with ETH right now?
The
Denkun upgrade, right?
Yeah.
So what is that going to do to ETH? It's going to lower fees, and that's a really big deal.
So that's proto-dank sharding. That's the start of sharding.
So explain sharding to our viewers so they know what that means in this case.
Sharding is the process of taking an item and slicing it up into pieces.
Okay.
So let's talk about it from decentralized storage. Okay. So if you go to AWS, that's centralized storage, and you go and put your file in there, then your whole file is in there. But if you go to Filecoin or some other, decentralized storage, then your file is broken up into pieces, in a bunch of pieces.
Like LimeWire with music sharing years ago, right?
Yeah. And then those are spread out across the decentralized storage such that nobody has enough to be able to reconstitute it. Except you draw it back because you own the shards.
Right. Okay.
Right. So you pay to, like Filecoin, you pay some Filecoin to have people store your shards.
Okay.
But they can't, there's no possibility that they would be able to reconstitute or spy on your data because it's combined, like all of your file material is combined, and then it's hashed.
Right.
And then it's sliced.
Okay.
And then it's spread out.
So privacy, no one can see your data.
Nobody can see your data, but it's recoverable. So I think ETH is, a Filecoin rather, is like 30 shards or more.
Okay.
And then if you have at least 10 shards, you can recover. So a number of different elements in the decentralized storage mechanism can fall out or collapse or die or be pruned, and you could still get your data back from the remaining shards. Okay. So there's some reliability in there, and there's some additional security as opposed to somebody like Google Drive or AWS or OneDrive or one of these other ones where a big company that has a big server farm takes in your data. Well, they can decrunch your data anytime they want. I mean, this is one of the things that people are concerned about.
Sure. Google Drive, you upload a document to Google Drive. They have the right to read that document, and they can judge you on what they read in that document.
Right.
You upload a photo, they can judge the photo. If you have text written onto the photo, they will read the text on the photo and decide whether or not you're a good person or not.
Yeah.
So this sort of gets out of that realm.
Well, this is part of the promise of decentralization is the ability for you to securely store your own information, your own digital assets or footprint,
right?
Where other people can't read it, can't deny you access to it, can't deplatform you. I mean, this is one of the big promises in crypto is the ability to control your own digital footprint.
Right.
right? My wallet has my passphrase and my seed phrase, and without them, you can't get anything out of my wallet.
Right.
This is something that this doesn't exist in the banking world. If you're in the banking world and you put your $100,000 in the bank, and then the government comes and they say, no, he doesn't get his money back. You get your money back.
Right.
The money goes to them, or it gets seized, or frozen, or whatever.
Yep.
But in crypto, they're going to have to work a lot harder at that, because my wallet is my wallet, and you can't take anything out of my wallet unless you can compromise my passphrase or my seed phrase. So you can be socially engineered. This is how they've done a few people. Where they socially engineered them. The other one is you can have poor security. You don't put your seed phrase on your Google Drive, right? These are things that people know, that if they're in crypto, if you're not in crypto, they don't know. Is your wallet is not in your pocket. Your wallet is on chain. That means everybody can look in your wallet.
Now the fees are going to go down too with this upgrade to ETH. The fees will go down.
Fees have gone down, and fees are going to continue to go down.
Right.
One of the things that Den Kun is supposed to do is lower the cost for bulk data. So Den Kun allows you to have a roll up. You can take be on optimism, and you can take 5,000, 10,000 transactions, roll them up into a blob of data.
Right.
And then that blob of data isn't necessarily on chain, but it's secured on chain.
Okay.
So you're taking like a hash or some subset of it that's a key, and you're saying, here's the blob, do this with the ETH chain, but there's the blob is not in the chain. So it's a reduction in the cost for running the smart reactive computer, the EVM. You're running the EVM to take an action.
What was your most recent ETH charge to buy an NFT that you had? How much did it cost you?
How much for the last one I did, or how much for the last one I didn't do?
Either. Yeah.
So the last one I did, I think I paid $18
for one transaction.
For one transaction.
That's a problem, isn't it? Having that high fee structure.
Yeah. So gas fees are a little high right now. A lot of activity, and they continue to be high. The one that I turned down yesterday was $6 worth of mint, and it was $95.
The
fees were $95.
Now, who would that fee go to? Would that go to the stakers?
There's gas fees.
The gas fees. But like, we're talking about the ETH ETF, if these guys were staking their ETF, is that where that fee goes? Like to BlackRock, if they're staking that?
Yeah. So you have to be a miner, or you have to be a node in order to get paid. Right.
Right.
The stakers are delegating into nodes, and then the nodes are getting paid.
And is the node sharing those those fees back to the staker?
A small portion of that goes back to the staker, and the main body of it goes to the delegated authority. $95, and that's nothing. That's nothing. The guys, I have a mint coming up on Monday, and the people who are promoting the process and have the release coming they told everybody, please pray for low gas fees.
Yeah.
Because gas fees went crazy just recently, and that $95 was $300.
If this ETF gets approved for ETH, and we see money flooding in, that's going to increase those transactions. But we have the upgrade coming up that's going to lower the fees. But this is a problem.
So ETH fees have been a problem for a long time.
Yeah.
And there's a roadmap to reduce fees. But, ETH is a leader for a reason, and Solana is cheap for a reason. And if you want to go to Solana, they've got NFTs, they've got PFPs for you, they've got meme coins, they've got shit coins. All those things are there. If you want to accept the lower security, you're paying for increased security, and you're paying for being on a premier chain. That's part of that's what these costs are.
If you bought an NFT on Solana, could you move it to an ETH chain?
So there's Solana contract. Remember, an NFT, like a PFPs,
right?
Okay, they all operate through a smart contract. The smart contract lives on a chain.
Okay,
so it's in the contract on the chain. I can't take the contract and move the contract to another chain. You can do that if you own the contract, but I don't own the contract. I just own an asset in the contract. And that I can't own that asset over here unless the contract moves over here.
So this is kind of a random question in that area. Chainlink's new cross-chain interop interoperability protocol.
Mhm.
Does that have to do with this being able to take that? Well, you still
So
couldn't move your NFT because you're saying it's the side of the contract.
yeah,
So,
so cross chain swap and all of this is not about uh, non fungible tokens. It's about fungible tokens. Okay,
oh,
so ETH is a fungible token.
right.
Bitcoin is a fungible token.
Yeah.
Cross chain between Bitcoin and ETH.
Yeah.
I sell ETH to receive Bitcoin, or I sell Bitcoin to receive ETH.
Sure. They're fungible. Yes.
That's
NFTs by definition are not.
But that's what the
Right.
cross chain is about.
Right.
So people like a Thorchain or
Mhm.
these others that are talking about interblock communications,
Yeah.
and how we're going to do this thing where I'm going to swap this $5,000 worth of ETH for $5,000 worth of Solana or $5,000 worth of Bitcoin or whatever. How that's going to work,
Right.
right? The chain swap part is always the dangerous part. And that's the most expense, the most risk. And everybody wants it because they want to be able to take, oh, well, I've got a lot of this asset and I want to use it for this thing over here. I don't want to turn it into cash
Mhm.
and then buy on Coinbase and then transfer to my wallet. I mean, it's
A lot of
whole
transfer.
tons of fees,
Right. Fees.
right?
Risk of
And
transfer.
there's
Yeah.
risk, but there's risk in the cross chain. When people solve the cross chain problem and it's smooth, and it
Mhm.
goes like this, it's reaching a broader audience in terms of availability of use.
Mhm.
You're
Right.
going to be able to spend, Chainlink to buy something instead of spending ETH. And the way you're going to do that is you're going to go through something where it's going to convert your Chainlink into ETH and pay for your thing and then give you the thing.
Right.
Right. This
That
is
ease of use is why BlackRock's ETF is pumping right now. People can now get into Bitcoin without having to have a wallet and knowing passphrases. They can just open the Robinhood app and they can buy some
the
ETF.
two biggest things that are going on that make the ETFs work: direct exposure to the asset, right? The Grayscale had to convert to a spot in order to be direct.
Mhm.
Okay. And the other one is no wallet, no custody.
Yes. Right.
This is huge.
Yes.
This part here, having direct exposure to the asset is great. And lots of people can get that today, but lots of people are not comfortable going out and getting a wallet and putting it on their phone and putting $10,000 in it and realizing that if they break the phone and lose the seed phrase, can't remember the passphrase, they're
It's
sunk
gone.
and it's gone.
Yeah.
Okay. And people have lost millions like this.
That's right.
And so being able to take that out of the equation
Mhm.
in a financial aspect that allows people who don't know what Bitcoin is, don't know what ETH is, and don't care
Right.
to be exposed to it for a financial benefit.
Right. Yeah. They're
Right.
not studying it like us. They're not hanging out with friends talking about it. They just want the game.
Yeah,
just
it's
want-
pretty much, it's going up.
Yeah.
Can I get some of that?
Yeah.
Right. It makes sense.
So Polymarket, I'm going to show you some of
Yeah.
these right here. Here's some of their predictions. This is interesting. Crypto prices, ETH above $4,000 by Friday, 48% chance.
Wow.
I know, this is interesting. Will Bitcoin hit 100K in 2024?
I'll take that bet.
57%.
I'll
I'm
take that bet.
surprised that's that low.
I would take that bet in a heartbeat.
Yeah.
I think it's going to be 100K by Thanksgiving.
Yeah.
NFA, DYOR.
Right. Ethereum will hit an all-time high by March, 34%. Yeah, I wouldn't take that bet either. But look at this last one. ETH will hit an all-time high in 2024, 79% chance.
Yep.
79% chance.
Mhm.
Let's look at its Bitcoin predictions. Let's see. Well, a new country buy Bitcoin in 2024, 33%. I think there's talk right now that there's a country buying Bitcoin. There's this mystery wallet that's buying 100 Bitcoin a day. Have you heard about that?
Somebody's buying.
Someone's thinking that the
Yeah.
country that's buying 100, and they've been doing this for a while consistently every day, 100 Bitcoin. Will Bitcoin hit 250K this year? 14% chance.
Yeah, I don't think so. It's probably going to top 120 this year.
When will Satoshi's identity be proven? 89% not proven this year. It's not going to
Oh yeah, they think this year it's about this year because of Craig Wright,
Right.
because his lawsuit should come to fruition this year, and he'll either win or lose.
But 89% of people betting, they're saying it's not going to be proven this year. No. I don't think it'll ever be proven. The identity of
It's
Satoshi.
unlikely that we'll find out because they understood at the very beginning how risky it would be identified. Right. This is part of why Craig's not Satoshi, is because he doesn't really recognize that what they recognized. You're going to be hated by some people that are very powerful, and they're not
Right.
going to want you to be successful.
Yeah.
It's just
And tell me about that big wallet move that we saw last week. Was it?
the
60
1,000 Bitcoin move.
Yeah,
Yeah,
yeah.
yeah. So there's a wallet that was a miner in 2010.
Original
Original
This is really
miner.
original.
Miner, back when it was 50 coins every 10 minutes.
Okay.
Okay. And that wallet moved 1,000 Bitcoin last week. 100, what was it, 100 Bitcoin at a time or something like that?
No
But
test transaction either, right? They just
no,
moved it.
straight to moving. I think it moved 100 Bitcoin the first move. And that's a lot.
That's a lot of money.
That's $500,000, man.
I mean, you got to know what you're doing
Oh, yeah.
to move that much money without a little
Yeah,
one
and
Satoshi test.
Yeah. And I'm pretty sure that if you had a wallet from 2010 and you haven't moved it since 2010, pretty sure that if you moved a big piece out of that right away, that you have another wallet to use a little more frequently.
Right.
Not
Yeah.
15, 14 years later. I'm just going to move. I remember how. Just transfer it all. Don't worry about it.
You think this was a move just to prove that Craig Wright didn't, his claim in court, because it kind of screws him over, doesn't it?
Okay. So, well, but let's step back for a second, because what you didn't say was Craig Wright listed this wallet ID as one of the wallets that he holds control over.
So in court, he listed, this is one of my wallets. He put down the wallet address. And then now it comes, like, this big movement happens from that wallet.
Yes. And the question becomes, was it Craig? Did he move it?
Right.
And if he did, why has he been unwilling to move it for the court for all this last 5 years or whatever to prove that it's him?
Oh, because they've been asking him to move something to prove it, right? He could move it at any moment to prove it.
Yeah. Well, the question is if you have access and you are in control, then prove it and show it and be over with this, right? If he wants to move forward, then it's the logical thing to do to say, okay, here, it's very simple. Let me pull out my phone. Let me show you here. Now we can go chase this on chain, but now here's the wallet address that I told you was mine. Okay. Now I'm going to go move it to a new address or another address or anything. You can move one sat. It wouldn't matter. Moving any asset out of there, even the smallest amount, shows that you can.
Right.
And he has never done that. And all the time he's been in all these lawsuits and all this stuff, it's always about trying to come up with some 15-year-old email, 10-year-old email or some bullshit. This is bullshit.
Yeah.
Okay. If you're really the guy, it's not going to take you 5 years to prove that you're the guy.
And this money that moved didn't go from this OG wallet to Coinbase. It went from a wallet to a wallet.
I do not know where it went.
But we don't know where it ended up.
I do not know where it ended up.
Okay. But either way, it doesn't help Craig Wright in his lawsuit. This is just someone could have done this simply to show it wasn't his wallet.
It very much could hurt him.
Yeah.
Because if the other side of this lawsuit turns around and says, hey, hold on a second. You listed this wallet and this wallet just drained out $60+ million worth of Bitcoin.
Right.
So now prove that was you. You said this is your wallet. Now prove it was you.
Right. This is not going to be good for his court case.
It can't be good.
No.
The only thing that can be good is if nobody notices.
That much movement on a
No, I'm just saying it's a
right.
wallet. It's a wallet address inside of a court case that's been going on for years.
Right.
So who's looking back at those wallet addresses that's not in crypto? Is the judge in crypto? I doubt it.
No.
Is the defense in crypto? I don't know, man. This guy's trying to prove his identity.
Right.
And so I don't know how the opposition shows on that side of a thing, but if they're not into crypto and they're not following it on Twitter and Discord and wherever else, then you're not hearing that, oh, hey, that's a wallet that people recognize. So
are all those original miner wallet addresses known? Like, are people are watching a lot of wallets. There's services out there you can be watching everything. But was this, other than Craig Wright claiming it, do we know, can we see all those original miners?
We do not know that this is an original Satoshi wallet. We do not know.
Do not know.
Yeah. There are a couple of wallets that can be definitively shown as Satoshi's wallet.
Okay.
Like the first wallet.
That's a known address.
Yeah.
And that's the one with 1 million Bitcoin in it, right?
Yeah. So it's not all, let's see. So his he, she, it, them, they, whatever Satoshi has multiple wallets,
Okay.
lots of wallets. Okay. But the very first wallets are considered to be Satoshi wallets because nobody else was there at the beginning.
He was mining his own Bitcoin on his own
Well,
computer.
testing the system, right? Trying to see that it works. And, I got 50 of the coin, so it worked.
Okay.
Right. These kinds of things. But the estimates are that Satoshi's wallets, plural, hold between 600,000 and 1.2 million Bitcoin.
Oh, so it's not just one wallet. It is spread amongst a few handful of
multiple wallets.
Okay.
But more than 1 million Bitcoin.
That's a lot of money.
Yeah. 600,000 to 1.2 million is the numbers that I've seen. Can you imagine having 1 million Bitcoin? If you had access to that wallet that had, say, 100,000 Bitcoin in it and was associated with Satoshi, and you move something in there, you probably panic the markets. Probably pretty hard.
A million that could crash the Bitcoin market, couldn't it?
Well, so the thing is who would not move it for so long and then want to sell it all? Like, that doesn't make sense. So the fear is, the wallet woke up, so you're going to go crash Bitcoin.
Right.
This is Chicken Little running around in the farm saying the sky is falling. That's not how it's going to play out. I mean, think about it. Who needs 1 million times $50,000 plus? Right? Who needs that?
Right.
It's not reasonable to think that Satoshi wants to destroy Bitcoin. And it's not reasonable to think that Satoshi needs money when he hadn't cashed in any Bitcoin in all this time. So if Satoshi, he, she, they, it, whatever, is still alive, they don't need the money.
Right.
Or they come and cashed out some coin.
Oh, during the last time it hit 69,000, they would have.
Or along the way, if I needed money along the way and it was, Bitcoin was worth $4,000 and I've got 1 million Bitcoin, I need a few $100,000. It's going to be pretty easy.
Yeah.
Right.
That makes sense.
And it's going to be very tempting to just take it when I need it.
Yeah.
But we're talking 15 years and not moved at all.
Yeah.
That says I don't need the money.
Yeah.
Right.
Or I'm not alive.
Yeah. And if I don't need the money, because the original assumption was he's alive. Right. So if I don't need the money and people would be all freaked out about it if it moved, I should just not touch it.
Yeah.
Just leave it be and go on about my way because I don't need it. Right. If you even touch the wallet, it could cause all kinds of gyrations in the market as people have conspiracy theories.
Right.
I mean, this is one of the things that's not so cool in the crypto world is there's a number of, kind of dark corners. Okay. Not necessarily like criminal intent corners, but, selfish, greedy, underhanded things exist in everywhere, right?
Yep.
They exist in crypto too. And these are one of the places where you get taken, you might not get it back.
Right.
Because it's crypto.
Yeah.
Right. And they might not get to use it, but you might not get it back.
Right. Thanks for watching this video. Stay tuned. Next week, we've got some great information coming up.